How's it going, everyone? It's Sam. Today I'm going to tell you about how you can raise your credit score using self-credit builder loans. I know there are a lot of moving parts in your credit scores. A lot of people don't really understand how to increase your credit score or what's important. So I'm going to cover that. And then we are also going to talk to you about that program, the self-credit builder loan, and talk to you about how you can raise your credit score using this website. So this is not a sponsored video by anyone. This is just for you to know how to increase your credit score, because credit scores do play a really vital role in our economy today. It plays a really important role in the banking world. And if you want to be able to save money on home loans or on credit cards or on auto loans or anything like that, you have to have a good credit score. It's one of the easiest things to do, but also one of the easiest things to screw up. So you don't need a lot of money to start this up. You really need very little money, but it is one thing that, can be elusive for a lot of people, can be very hard to increase. So if you guys like this, please leave a thumbs up. I really appreciate it. Also, if you do want some free stock, there is a link down there to WeBull. They are giving away 3 free stocks right now if you deposit $100. So payment history is the number one thing that you need to know that will increase your credit score. Is the largest part of what the credit bureaus look at, and it accounts for 35%. So payment history meaning you're making your payments on time and in full. So this is one of the most important things to have, and it can also save you from having to pay late fees, from having to pay interest. So you definitely want to keep this in mind when you are setting up payments for different loans and stuff like that. The next thing is the amount owed. And we'll talk about how to increase your score here in a little bit, but again, it's important to have the background. So amounts owed, how much credit you're actually utilizing of your available credit. So if you have a $10,000 line, or you have $10,000 available to you on one credit card and you spend $9,000, you might think that you're under the $10,000 limit, and that's good, but they want you to not use that much of your credit limit. So they usually want you to stay under 30% of what's available to you. So keep this in mind. So if you have very small credit lines, like a couple $100s, I would put something very little on it and then pay it off right away, then put something little on it. But if you have a larger amount, then just stay below 30%. That's what I typically do. The next thing is the length of credit history. So if you have had credit for a long time, they look at this as a positive thing. You want to have credit as long as possible. So an actionable tip is, if you have older credit, you want to keep it going for you. So if you have an old credit card that you just don't use, instead of calling to cancel it, assuming you don't pay an annual fee or anything like that, you should just keep it. The longer your credit history, the better. And whether you have old loans that are being paid off or you close old credit cards, it can drop your score because the length of your credit history gets shorter. Now, one of the last 2 sections is the credit mix. So how many different kinds of credit do you have? Not only credit cards, but auto loans, mortgage, all that kind of stuff, student loans. You want to have a diversified amount of different lines and different forms of credit. But if you don't have that, that's okay. It accounts for 10% of your credit score. So it's not that big a deal if you only have 1 or 2 different forms of credit if you are younger. Then the last thing that they take into account is new credit. So new credit inquiries, so hard inquiries on your credit. And this is if you are applying for new lines of credit, oftentimes they will hard pull your credit score, and that can cause your credit score to go down because you are applying for a lot of different credit. So that's something that they take into consideration too. So let's take a look at self-credit builder loans. So what they basically do is they allow you to start a loan, and basically what you do is you pay into this over time. So whatever time span you set with them, you pay into this over an amount of time, and this reports to your credit. So they report to the 3 different bureaus. After the time period is done where you're paying into this loan, you get your money back, you get a little bit of interest, and they do take a small financing charge. So this is one way that a lot of people are building their credit, and it's nice because they work with 2 different types of people. One are people that just don't have credit history. So there's another option where you can set up secured cards. So a secured card is where you deposit money at a bank or something, and then you get access to the line of credit, or you get access to that money, but you have to have the money up front. Now with this, you don't have to have the money. You just start making payments on something over time, and then you get the money at the end. So it's almost like a little savings account. So that is one way to go about it if you don't want to use a secured card, but it is for people with no credit history. So maybe you've just never had credit, or maybe you just need to build credit. Maybe you've had some bad experiences in the past where you didn't pay off your debt, or maybe you paid late and stuff like that. So a lot of the time your credit score can be diminished if you have this happen to you. So what you basically do is, and you can see it here, you can start by applying for a credit builder account. You pay off the credit builder account with a specified amount over a specified amount of time. And each month you make on-time payments, you build your credit history, and it adds to your savings in this account. And then at the end of the time period, then you unlock your savings and you get access to your money. So what they're really trying to do is they're trying to help your payment history. So that makes up 35% of your credit score, just like we talked about before, which is very significant. So they're trying to improve this. Now they have a little bit of videos, they have some testimonials on here, but what I want to show you is the pricing. This is something that I always consider. And basically you can set this little slider to whatever you want, however much you want to pay monthly. But let's say you want to pay $25. You don't have a ton of money to throw at this, but you pay $9 for the administration fee. So just to set up this account. You pay $25 a month for, let's say, 24 months. That means at the end of 24 months, you've paid about $600. After the 24 months, you've established credit history and you get $520. So you might be asking, okay, I paid $600. Why am I only getting $520? Well, you can see down here, they do charge an interest rate. They also charge that administration fee. So between the different financing charges, you have to pay about $90. Now you do get a little bit of interest, but this isn't that bad a deal. I mean, I know that you're probably looking at the $90, but when you consider that it increases your credit score, it's not that bad. They make money from their low finance charges, and also they probably get a kickback from the banks they work with for bringing in the money. But this is actually a pretty good deal because when you consider how much this could help your credit score, whether it is applying for a mortgage or an auto loan or decreasing the APR on some credit cards, if you can decrease your mortgage interest rate by 1% on a $200,000 loan, that means in the first year, you would save $2,000. So that's just the first year of the 30-year loan that you're looking at. So this $80, $90, if you can actually increase your credit score and it can actually help you out, that can be a huge difference. That can save you a lot of money. So it's kind of one of those things that you have to look at the broad picture instead of just thinking about the pennies. You have to think about the dollars. So that's something that I've always heard. Don't think about the pennies, think about the dollars. So don't be penny wise and dollar foolish. So that's something that I would consider if you're thinking about starting this up. Now, if you have any questions about credit scores, let me know. I was a personal banker for 2 to 3 years. So I did work with a lot of clients on their credit score, on improving it, making sure that they reported discrepancies in their credit and different disputes. So if you have questions, let me know in the comments below. Let me know if you are interested in this. I am not an affiliate or anything like that. Again, I just think it's an interesting website. It's a pretty good deal when you consider how much it can help you in the long run. And it's kind of one of those things where both parties get something out of it. I mean, obviously they're making a good amount of money and you're going to have some good savings too. So again, thank you guys for watching. Thank you for hitting the like button. Thank you for using that link down below to WeBull if you didn't want that, and for subscribing to the channel. Thank you, and I will see you in the next video. Bye.